Welcome to Electrified. It's your host, Dylan Loomis. So after Tesla's Q3 earnings, I think too many people have been focusing on little details, getting lost in the weeds. So I just want to zoom out and help give some context and make sure that we're not losing sight of the big picture long-term view of Tesla as a company. When it comes to Tesla's Q3 earnings, they did beat from an EPS standpoint, but they did miss on revenue, again, which is probably why the stock is down a bit after hours. With that said though, for long-term investors, it essentially means nothing, and we got some huge statements and claims from Elon, so let's get into it. So for Tesla to become the company that we all know it's on the path to becoming, it has to have the best talent in the world. After Tesla's recent AI day, Elon said they received a massive influx of applications from some world-class engineering talent, and basically he sees more people are realizing that Tesla is among the best when it comes to AI. When it comes to demand, Elon emphasized that Tesla is going to sell every car that it makes for as far as it can see into the future. Now, when asked about short-term demand, based on Elon's tone, you could sense that maybe there was a little demand pocket in China, given the recession problems right now, and specifically in the housing real estate market. It's having some sort of an impact, but again, Tesla has enough demand elsewhere where zooming out, demand is still not a problem at all. Some of you may recall earlier this week, I said that Elon probably would say, hey, some years will grow 65%, other years maybe will grow less than 50%, but on average, it'll work out to that 50% growth target. Basically, that's exactly what he said. So again, over time, as we have these little demand weakness pockets here and there, in the grand scheme of things, it means nothing. And when it comes to demand, Tesla said it has every intention and all of the confidence that it will be eligible for all of the IRA requirements. They're waiting for more detail from the Treasury, but we should get it before the end of this year. You can't talk about Tesla's demand without talking about the delivery waves, and Tesla even created a chart to kind of show us what's going on here. But according to Elon, Tesla got too big to continue doing the end of quarter delivery push. So even if they wanted to do that and continue to spend more money than they need to on expedite costs, they just can't anymore because there aren't enough ships, trains, or car carriers to do this. Going forward, it will be normal for us to see a gap between production and deliveries at the end of each quarter. On the Tesla Semi, we learned that officially it is not yet using 4680 cells, so it will indeed be 2170s to start. And as always, it'll take about a year to ramp up production that starts December 1st this year with Pepsi. But in 2024, Tesla is tentatively aiming for 50,000 semis produced and delivered. So allowing roughly 2 weeks for downtime, that's about 1,000 semis per week in 2024. Demand on the Tesla Energy side is still very strong, and they're expecting growth there to be between 150 and 200% per year, which is almost a 3x of what they're projecting for auto growth. One of my favorite parts of the call though was when Elon and Zach and some of the others on there kind of joked around about R&D costs and how basically you can't just compare the amount of money a company is spending on R&D and saying $5 billion spent by Tesla versus $5 billion spent by any other company. Those are going to yield two drastically different outcomes. Elon basically said Tesla is spending money and investing in everything that they can think of, and they're still generating free cash flow, which remember is after you account for capital expenditures. So Tesla is spending money to grow the company as fast as they know how without wasting resources, and they're doing it more efficiently than maybe any other company out there because they have the best R&D or engineering talent on the planet. Over the long term, this is a huge deal. For one of the major highlights of the call, Elon went on a little rant talking about Tesla stock, and basically he said that he sees a path for the first time for Tesla to be more valuable than Apple and Saudi Aramco combined. He also said he sees Tesla becoming more valuable than two Saudi Aramcos. That's equivalent to Tesla having around a $4 trillion market cap from around $690 billion today. Give or take a few dollars, that's a 6x in Tesla stock price from where we are at today. Of course, no timeline was given, but for him to say this at all shows that he has deep confidence in this happening at some point in the future. Oh, and Elon said all of that was without including anything for Optimus. On the battery front, we know this is the heartbeat of sorts when it comes to Tesla, and they said they are basically pedal to the metal going toward 1,000 gigawatt hours or 1 terawatt hour of battery production in the United States alone without suppliers just from Tesla. Elon reiterated multiple times this would be in a vertically integrated fashion, talking anode, cathode, lithium refining, the whole shebang. When it comes to 4680 production, Tesla said that in Q3, the cell production grew 3x when compared to Q2. They said the output is growing rapidly and these cells will be integrated into cars being built in Austin more and more in the months to come. There are definitely still challenges ahead, but everything seems to be full steam ahead and going well. Elon did say he sees a path to $70 per kilowatt hour at the cell level from these 4680s sometime in the future. Most importantly though, the entire Tesla team confirmed they do not see 4680s being any sort of a limiting factor for the Semi or the Cybertruck at all next year. And 4680 production is on track to exceed that figure of 1,000 car packs per week sometime in Q4. When it comes to a Tesla stock buyback, to everybody that's been clamoring for one, you will be celebrating tonight. Elon said in a roundabout way, a $5 to $10 billion Tesla stock buyback seems likely. Really, no matter what happens with the economy next year, even in a worst case scenario type of event, Tesla would still be able to do a significant buyback, again to the tune of $5 to $10 billion. Not a done deal, but it does seem very likely. Something I think it's very important to remember, Tesla told us that they're always projecting and running different scenarios specifically for a recession. So Tesla's already walked through a bunch of different scenarios, and even in a worst case type of scenario where we see a pretty significant recession in 2023, Tesla thinks it will still be generating a significant amount of cash. So when you consider that Tesla has $21 billion on the balance sheet, only $60 million in debt, and they just had a record quarter from a free cash flow generation standpoint, again, which is after CapEx, Tesla is in a beautiful position. And what's even better is Zach said he still sees enormous opportunity to improve Tesla's efficiency. So you just love to hear it. And lastly, let's just touch on a few financial metrics. Automotive gross margin, X credits, I said anything above 26 would be good. We got 26.8. A-okay. In yesterday's video, I said the second number I will be looking at is the operating margin. I said anything above 15 I would be pleased with. It came in 17.2. A-okay. The free cash flow number for Tesla in Q3 was huge. It was a record quarter, and to give you some context, let's just call this $3.3 billion in free cash flow. Compare that to the entirety of 2021 when Tesla generated $5 billion of free cash flow. So that's a massive quarter. Again, I would like to drive this point home. The free cash flow is after dealing with the CapEx number, and this is the number where Tesla is saying they're spending money as fast as they know how, investing in everything for the future, and they're still generating this much free cash. And one more metric that's really good to track, I know Forward Cap has put out some tweets about this as well. Operating expenses divided by revenue, just to show again how efficient Tesla is as a company. You basically just take the money Tesla is spending on operating the company and then divide that by the revenue it's generating by spending that much money. To give you some context, this number was around 35% back around 2017. Fast forward to today and they've driven it down below 10%. Of course, again, the lower the better because you're spending less money to generate more revenue. So, in summary, Tesla has a ton of cash. Tesla has basically no debt. Tesla has a ton of demand for as far as they can see. Tesla has one of the most exciting product roadmaps on the planet. Tesla has the best talent, the best engineers on the planet. Tesla is set up perfectly to fully take advantage of the Inflation Reduction Act. Tesla is on path to be one of the world's biggest battery producers as a car company. So, I think you guys get the picture, and Elon did also say that he thinks Q4 could be epic. So all is well in Tesla land. I'll go celebrate by having a nice meal. Hopefully you guys enjoy the rest of your day. Please like the video if you did, and a huge thank you to all of my Patreon supporters.